education credits. So Anna, take us away.
So today we're going to talk about the education credits and benefits on the 1040. So let me minimize. So we'll be talking about the student loan interest, the scholarship and fellowship income, education credits, and then how to calculate the education credits, and then the other education benefits. So generally, you cannot claim more than one benefit for the same education expense, and any non-taxable distribution is limited to the amount that does not exceed qualified educational expenses. So this little table here will help us see what's the type of benefit we can have, and then what that benefit is, and then if there's an annual limit to any of those benefits. And we can find this all in the 4012 tab J. I did want to point out that if someone has made contributions to like a education savings account, it's either the 529 or the Coverdell, those are out of scope, and so is the education savings fund. They are out of scope for us. So then we can just continue. And so the student loan interest. So this one is if you had a student loan and you're paying it back. It's an adjustment to income, and the maximum amount of interest that can be taken is the 2,500, and you'll receive a form that looks like this. It's a 1098E, and the phase out income is from 75,000 to 90. Unless you're married filing joint, then that changes to 160 to 180. And the loan was for an educational program where the taxpayer was at least half time. If you're filing married separate, this is a credit that you're not eligible for. This slide talks about tax treatment of scholarships or fellowship payments. So you may have received a scholarship or a fellowship, and it may be tax-free. It would be tax-free if you are attending a qualified secondary institution. Essentially they have like free financial aid for you, and that kind of is what qualifies them. The other half would be that a scholarship or fellowship is tax-free only if it does not go above the qualified expenses. So like tuition, if the amount goes to like room and board, then that amount does become taxable. And it cannot represent payment for teaching, research, or other services required as a condition of the scholarship. So this is kind of what's telling us if it's taxable or not. This is where the fun begins as far as credits. So we have two. We have the American Opportunity Credit, and we have the Lifetime Learning Credit. The American Opportunity Credit is for taxpayers or individuals who are doing their undergraduate or graduate degree. Sorry, no, it's only the undergraduate degree. They can be taking graduate classes, I guess, but it would have to be within the first 4 years of school. And you would have to have a maximum amount of qualified expenses of 4,000. And there is a income limit for the credit. And then you also need to be enrolled half-time, at least half-time. And then this one's very specific in that you can't have a felony or drug conviction. And it's generally refundable under the age of 24. The lifetime learning, essentially, if you're going to a qualified institution, even if you're not necessarily getting a degree at the end of your classes, you can take the lifetime learning. The maximum amount for the qualified expenses is 10,000. There's also a phase out limit, which is the same as the American Opportunity. And there's really no other conditions. And that part is the lifetime learning is non-refundable. The American Opportunity has the both refundable and non-refundable piece. This is talking about who can take the education credit. So the taxpayer has to be taking it for themselves, their spouse, or a dependent who is enrolled at least, who attended a post-secondary education institution. They do need to have the Form 1098-T. Sometimes students don't get that, but if they don't have it, everything that would be on the 1098-T, they need to have that information with them, if they happen not to have it. This one is just the basic requirements that must be met by the taxpayer. So they need to be not claimed by someone else as a dependent. They cannot be married, filing separate, and their AGI must be within the limitations of their of the filing status. The other piece is they cannot be non-resident aliens for any part of the year, so they can't be non-residents any part of the year. And if they are non-resident aliens, they can qualify as a resident. So meaning there are students that we have that are international students who after their 5th year or 3rd year, depending on what visa they're on, they qualify as residents for tax purposes. So then they would be able to claim the education credit. And then they need to attend an accredited post-secondary education. With the American Opportunity Credit, the taxpayer has to have a Social Security number or ITIN by the time they are doing the return. So if they're set to get an ITIN or Social Security number later in the year after filing, then they cannot get the American Opportunity Credit. And
Anna?
that fall. Yes.
Sorry, one quick question. Are you going to touch on graduate versus undergraduate education? And sometimes with the ITIN or just getting a Social Security number, that if they're in grad school, they probably have already attended 4 years of undergraduate education.
Can you repeat that? I missed the last part.
Oh, okay. I'm so sorry.
No,
I was
you're fine.
wondering if, and I apologize if you've already have covered this, but when we do have students or we do have families that become eligible to file a resident return, the Form 1040,
Mhm.
and they're also in school, if they're a graduate student, that they're not eligible for the American Opportunity Credits because theoretically, they've already have completed 4 years of undergraduate education.
Yeah, so the American I think it's here in like further on, but the
Okay,
American
that's good.
Opportunity Credit is only the first 4 years of your graduate degree. And you can't have completed your your undergraduate degree. You can't have completed it. So if like she was mentioning, Dr. Moody was mentioning, if you're a international student who was filing as a non-resident and then can do resident return, most often the American Opportunity is not an option because they've already done their undergraduate degree and they already have the first degree under their belt. So I think it's up here somewhere too, but yes, that is a very important thing to remember. Here are educational expenses as to what qualifies. So any required tuition and fees would be applicable as a qualifying expense. Required books, supplies, anything that's required by the course can be qualifying. What's not covered would be room and board. So essentially everyone has to have a place to live. And this is the part that confuses a lot of people, is everyone has to have a place to live, but not everyone goes to a higher institution. So not everyone gets a higher education, but everyone has to have a place to live. So that's why room and board is not covered. Research, equipment, and other expenses required for enrollment or attendance may not be qualifying. Travel, clerical help, health insurance or fees is not required. Is not an expense that they can take. A lot of students who are graduate students do pay for health insurance and such fees. So that's something to keep an eye out on. What else? Oh, I wanted to highlight that there are some fees that are required by colleges. So like maybe the business college has a fee that's required by all the students who are a business student. And so that's a qualifying expense that can be added to the expenses that may not be on the tuition and fees statement. Or the 1098-T. So I did want to point that out. So here's kind of an example. It says when Janice enrolled for her freshman year of college, she had to pay a separate student activity fee in addition to her tuition. This activity fee is required of all students and is used solely to fund on-campus organization and activities run by students, such as student newspaper and the student government. No portion of the fee covers personal expenses. Although labeled as a student activity fee, the fee is required for Janice's college enrollment and attendance. Therefore, it is a qualified expense. And like I just mentioned, if it's required by every student, even if it's per college, it's a qualifying expense. This is the second example. Jackie paid $3,000 for tuition and $5,000 for room and board at an eligible university. The $5,000 paid for room and board is not a qualified expense for education credits. And again, that's because everyone has to pay for a place to live. So it's not a qualifying expense. So this is where we kind of get into which is the best benefit that one can take. So these are the different ones that are available. So we'll just kind of go into this one. So this chart here highlights what each benefit is, what the annual limit is, and then the qualifying expenses besides tuition and enrollment. Oh goodness. So as you can see, each one has different ones that may be applicable. So if they already graduated with their undergraduate degree, then the American Opportunity wouldn't be allowed. So you would be able to see like, well, what other one can they apply to? And then, oops. And so then, I think I'm different. So then it's kind of trying to play with the numbers. Once you get down to it, it's trying to play with the numbers to see which one provides the best benefit for the taxpayer. Because sometimes it's not black and white. But the best one usually is always the American Opportunity because it has both the refundable and non-refundable piece to it. So we are going to start the exercises. Does anyone have any questions before we get to this part? I'll just stop sharing real quick so I can see everyone. Yeah, okay, so then let me continue sharing my screen. Okay. And so then we can do this one together. So for question 1, Bob was a full-time student and a 5th-year senior. He only has claimed the American Opportunity Credit for 3 years earlier. Does he qualify for the American Opportunity Credit?
Yes.
Yes, that is correct because he has not completed his degree and he's only claimed it for the previous 3 years. So this would be his final year to take the American Opportunity Credit. The second one, Janice works full-time and takes one course a month at night or for night school. Some of the courses are not for credit, but they are meant to advance her career. Which credit is appropriate for her? The American
Lifetime learning.
Lifetime learning, yes. And that's because she's not taking full-time classes, which is one of the requirements for the American Opportunity Credit. Clark is an older student who has gone back to college half-time after serving 18 months in prison for felony drug possession. Which credit is appropriate for him? American Opportunity or the Lifetime Learning?
You would need to take the lifetime learning. He doesn't qualify for the American because of the drug.
Yes, that's correct. Again, you can't have a felony conviction for the American Opportunity. That's the one thing that's different from the, well, not one, but one of the things that's different. And this one will go into how we calculate the tuition expenses. So if they have a 1098-T, sometimes they'll bring in a statement, sometimes they won't, but this one, if they at least minimally need to bring this one. So as you can see, you'll ask them if there's anything that's not listed as tuition or related expenses in box 1. If there is, let's say there was a required book, you add it to box 1. If not, you just leave it alone. And then you take box 5 from box 1 to see if it is larger or smaller. If box 5 is larger, then that is considered taxable income, scholarship income. If box 1 is larger than box 5, then that's a benefit they can take. So it could be a credit that they might be qualifying for. And I think this one is showing us what is, I think it's just showing us that they had more tuition than scholarships. So they're qualifying for a credit here. This one is helping us calculate, sorry, my little viewfinder, I can see everybody's in the way. So this one is calculating the education credit. So it's asking us how, or it's helping us calculate to see how much they had, let's see, in scholarships, and how much they could take, and how much would be taxable for the income piece. So again, it's just taking box 5 and box 1, seeing which one is bigger. If box 1 is bigger, that means there's a credit. If box 5 is bigger, that means it's a taxable scholarship.
If you go back a slide, Anna, at the very bottom in the little notes, it says we've been starting to do this a little more the last few years where you can't double dip though, but you can take the education credit even if your scholarship is larger. If you increase the amount of the scholarship you're having as income, you can take a portion as a credit. So sometimes, well, what I do personally is I get out a little sheet and I say, okay, we're using 5,000 as a scholarship and we're using X amount, 5,000 as expense for the credit. Check, see what that is, then I'll increase it by a bit, and then I'll try to get as large a refund for them as possible when you add the federal and the state together. So this little note is saying that that is a possibility that you can do that, that you can take some of your expenses or take some of the expenses and use it for the credit, but you have to increase the scholarship. You can't use it to offset. See, that's the double dipping that we were talking about earlier. And then in publication 970, there's a lot more detail about that if you want to read more.
Yes, oh, I did go glance at publication 970 and there's a lot of information on there that you can find. And it does talk about a little bit of the ones that are like out of scope if you guys are ever just curious. There's more about those in there as well. This talks about how parents can claim their students as a dependent or and for the American Opportunity Credit. But the student has to be full-time and be at in an eligible degree for at least 5 months. So if, I don't know, that would be like one semester. That would count for the 5 months. Well, if they were in school for 5 months. If the parent is not present, it's always great to ask them to either verify or like sometimes they know, sometimes they don't, but you need to verify to see if the parent's claiming them. Because a lot of the times, it's more beneficial for the parent to take the credit on behalf of the child because they have more of income, so the credit is a little bit higher. And the student cannot be claimed. Okay, and the student has to be claimed by the parent to be eligible for the American Opportunity Credit. I think
Or
here,
you're not, just
Yes.
to clarify, not to clarify, but just maybe to put an exclamation point on it.
Yes.
Parents, until the child is 24 years of age, and is a
Yes.
full-time student, is able to claim the child, has the legal right to claim the child as a dependent on the tax return, to get the dependent credit as well as the child tax credit. And even though the child might be on a huge Regent scholarship that's paying for everything plus a little bit extra, I'd like to jokingly say get out the Kleenex box, because even using sometimes Kyla's measurement of trying to move some of the scholarship, some of the scholarship income is education expenses. There typically is going to be some type of payment that's coming due to the student, especially if the parent is claiming it on the tax return. But the only time a parent is not able to claim the child on the tax return would be if the child is earning more than the standard deduction in a job, standalone, because therefore I think it's considered to be more, that they're paying more than half of their expenses. But as Anna said, it's best to have the student call the parent to make sure, because this is one of those things that we'll typically reject. And it's always it's a good thing if it rejects, if it's the students has gone in last. But a lot of times students will come in and file early and take the American Opportunity Credit. And then mom and dad come in later to file and claiming their child as a dependent, and then theirs rejects. And then it's a mess getting that fixed. So it's better that we take the time up front.
to verify.
Yeah, to verify. Thank you, Anna.
Yep, and I did want to kind of add, if they have a lot of scholarship income, let's say it's more than the standard deduction, technically that doesn't make them, for the American Opportunity Credit, they can still be claimed because that's not considered income for the student, even though it is considered taxable if they had more scholarship, but for the credit, even though they had more of that higher scholarship, it's not considered wages for the support side of it. And then this is where this is Form 8615. It's tax for certain children who have unearned income. If the student includes tax-free education assistance in income, has a filing requirement, and has unearned income that includes taxable scholarship over $2,200, they have to file 8615. If they have to file the 8615 with what I just said, it would be considered out of scope. So that would be something we wouldn't have to worry about.
It's always best to confer with your site coordinator or quality reviewer if you want to process, because there may be experiences that they have had that, you understand why you need to do certain things on the education plans and the scholarship program.
Yes, and the education credit ones, sometimes you always need a little bit of help just to like sort things through. With this one is if if the student is under the age of 24 and is trying to claim the American Opportunity Credit, so you're gonna use this chart to help you figure that out. So there will be circumstances where the student is going to take the American Opportunity Credit for maybe their parents aren't there, or for whatever reason, you would follow this if they're under the age of 24. So it's going to ask if you are under the age of 24. If the answer is yes, then we would go on to 2. Were they over the age of 18? If they were, then you go to question 3. If they are not, then you go to question 4, where it says if you are over, were you 18 at the age of 2023? And then if the answer is yes, they were 18 at the end of 2023, then they go to 5. If the answer is no, then they go to 6, and it's asking if either of the parents were alive in 2023. If the answer is yes, then we would have to answer 7. Are they doing a joint return? And so then if they are not doing a joint return, then they cannot claim the refundable part of the credit. So this is what's gonna basically help you. If the parents were not in the picture or are not alive, then they can take the refundable piece of it. So that's what it's trying to determine, whether or not you can take the refundable piece or not.
And we will see some students that are emancipated from their parents.
Yes.
So we always, want to ask that question, because or they're, emancipated, but maybe they are coming, they're out of foster care, so they don't have a legal guardian or a legal parent, so they're able to claim themselves.
So then I think that would kind of be covered with question 5. Was your earned income less than half of your own support? In that situation, if they're emancipated, the question would be yes. So then they would go back to 6 and 7, because they are providing more than half of their support. Any questions on this one under the age of 24? Okay, we will continue. Just a few things to remember regarding the education stuff. So, compute any other eligible education benefit that's has the lowest tax liability. Because that'll give them the highest refund if they're due a refund. And then remember not to double dip with the education expenses. The other part would be take the education credit that's most advantageous. So if they're able to do the American Opportunity Credit, that one's usually always the most advantageous. But if not, then it would be a lifetime learning. So make sure that we're looking at which one's the best. If there's any extra notes, make sure that we write them down on the intake and interview sheet, just for the quality reviewer to make sure to double check what's going on with the return. And then if we added like any book expenses, any other additional fees, we would try our best to put it on the 1098-T form, because that one's going to stay with the return. I was gonna add something. Oh, with added expenses, like I said, I always remember that there could be expenses that are not on the tuition. Students who study abroad, there's fees that they have to pay for that are additional to. And every student who studies abroad has to pay for those, and they're pretty substantial. So always try to ask for a copy of their statement, and then we can add them to the 1098-T. And then ask if the American Opportunity Credit was disallowed in previous years. It's kind of like with the, what is the one credit? The EIC credit, where it gets disallowed, they would get a letter. And so they would know. And I think that was it. So do we have any questions or comments, anything that needs to be clarified or I didn't fully cover?
So Anna, have they changed the rules regarding study abroad or education abroad? Because at one point in time, we couldn't use any of those expenses because it was the student's choice to
To
study
study,
abroad.
they may have, would
If
it
it's something
be?
we can check on, but if not, if there's something in their college bulletin that says that they have to have some type of an international experience,
Mhm.
then I would tell that student to print off where it states that and put it in their tax envelope as justification for taking their study abroad expenses outside of tuition. Because it was required
By the institution
by the institution or their college.
or the program.
It's
Okay.
kind of a gray area, but that's one way and I have not been in the publication 17 to test that theory out.
To verify that, I wouldn't know. I just do know that there are other fees when you're studying abroad that
That's
could qualify, so.
Last I checked, Pub 17 was still in draft, but I'll check again.
Okay.
I'll stop
But-
asking questions, Anna, so everyone else can ask questions.
Well, I
No,
have
that's
a
okay.
question.
Yeah.
My question is it possible, it seemed to me it was, that it was possible for a student to file a tax return based on their fellowship, if it was, especially if it was large, and then their parents could take a tax credit for the expenses. Is that true?
Yes. Yes, that's true.
Oh,
Yep.
yeah, I
Yep.
thought that was true, yeah.
Yep, we could have the student just have them take the entire scholarship or fellowship and then give all the expenses to the parents, or we can, if both the parents and the student are there at the same time, we can kind of go back and forth and pick and choose and find the sweet spot. I mean, it's a trial and error thing, so it takes a long time, but we want to try to get them the best benefit we can.
Okay, thank you.
Thank you, Kyla. That one's, I was gonna say, that one's a little bit newer for me because I haven't done it that way for a long time. Like Kyla said, I think it's only been here recently, the last couple of years where we've kind of done it. So I'm like, I kind of know, but Kyla knows more on that one.
Thank you.
Yep. Any other questions or anything that needs to be clarified?
This is Dave. I don't know whether it's a clarification question about exactly what it is, but the American Opportunity Credit.
Mhm.
A lot of times folks talk about it as a $2,500 credit for the first 4,000 of expenses, but it's really a two-parter.
Mhm.
It's 100% of the first 2,000. And so in a lot of cases, working with a student, you can add 2,000 of the scholarship to their income and not really have an impact on their return. But then the parent, if they're claiming him as a dependent, gets a full $2,000 credit. And so that, and you don't, if you go to the 4,000, they get an extra 500, but now you put them in kiddie tax. And so that first 2,000 probably won't put them in a kiddie tax situation. So
And the reason that kind of happens like that is because the American Opportunity Credit has the refundable portion. So there's a portion that's not, it's only based on your tax liability. And then the other portion, obviously, it doesn't matter what your tax liability is because then it's refundable.
Yep. So a lot of times you can really help the parent, but the parent has to be aware. The other thing that came up once or twice last year is if the parent uses a 529 account to pay those expenses. And so then it really gets messy.
The key thing with that is on a 529, you can use room and board and other expenses.
Yep.
So the trick there is to say the room and board goes to 529, but then you can still use the tuition and other fees for the credit. So that's where it also gets nuanced and tricky because there's certain things that you can use room and board for, but most of them you can't. So, but the educational savings plans, you can, the 529s, you can use room and board for expenses to offset that. So
Yeah, and the tricky part is because if they pay the full amount, tuition, room and board from the 529 account, then really you can't use those expenses unless you report that as income from the
Yep.
529.
Mhm.
So you may end up with the parent needing to report some 529 income. No
Yep.
penalty. You avoid the penalty at least, but you do have some income.
Mhm.
Dave, those are some really good points, and I know we've been seeing more and more of those in the last several years, and I'm reminded of one parent who always had the checkbook with them, knowing that in order for them to get the credits, their child would be pushed into kitty tax, and then they would support the child in paying it. So that's once again, it's great if parents and child or students, right, can be together when they're doing their returns.
That was a really good question and comment. Anything else?
All right.
Oh,
Well,
I
Anna-
did find out when I was looking yesterday. So for instance, in general, if you're a grad student, you don't do the American Opportunity Credit because you would have done your first 4 years. But I was looking and let's say somebody graduated in 3 or 3.5, like 3.5 years, and the other half of the year they're in grad school, they can still take the American Opportunity for the full year, even though half of their year was grad
Mhm.
student, because it's still their 4th year.
Okay. And that was the same year they received their degree, right? Okay.
Unfortunately, it seems like the first full year when you're a freshman, you can only use a semester. Right? Because typically, traditionally, we're starting in the fall, but that technically is the first year. Yeah, Kyla, thank you. That's a good point.
Mhm.
Other questions, comments? Anna, thank you so much.